So friends, let's take the next question. That is the last question in this chapter. That is question number 6.6. Pause the video and read the question thoroughly. Okay, I hope you have completed reading the question. Now let's see what is given in this question. A limited company has capacity to produce 1 lakh units of a product every month. So there is a company, A Limited, and this company has the capacity to produce 1 lakh units every month. Now, its works cost at varying levels of production is as under. What is works cost? You know what is works cost? It is nothing but the prime cost plus its factory overhead. Okay, so prime cost plus factory overhead, basically the cost what is incurred in the factory. Okay, at varying levels of production. That means when they are operating at 10%, what is the cost? Then 20%, what is the cost? What is the factory, the works cost, etc., etc. They have given it up to 100% capacity. Okay, and the cost what they are given is in per unit. That means the works cost per unit. Okay, now its fixed administration expense amount to 1,50,000 and fixed marketing expense amount to 2,50,000. So these are fixed expenses, and also those expenses are not anything related with your factory cost. Now, the variable distribution cost amounts to rupees 30 per unit. That is the variable portion of the distribution overheads or distribution cost. Now, it can sell 100% of its output at rupees 500 per unit, provided it incurs the following expenditure, further expenditure. That means if the company wants to sell 100% of its output. Now, if the company wants to sell 100% of its output, what they have to do with respect to the production? It has to produce 100% of the output. Okay, as the production also. So it can operate at 100% capacity, and it can sell each goods at rupees 500 per unit. Okay, provided it incurs the following expenditure. What are those expenditure? One, A, it gives gift items costing rupees 30 per unit of sale. So it has to give some gift item, and this gift item will cost you 30 rupees per unit. So for the entire units we are solding within the 100% capacity, you have to give a gift which will cost rupees 30 per unit. Okay, now it has lucky draws every month, giving first prize of 50,000, second prize of 25,000, and third prize of 10,000, and 3 consolation prizes of rupees 5,000 each to the customers buying the product. Okay, so basically as a promotion, the company has to organize some lucky draw, and as a part of lucky draw, they will have to give some gift. Okay, first prize, second prize, third prize, as well as the consolation prizes. Now, the entire cost of giving these prizes, okay, that will be an additional expenditure for the company to get 100% capacity utilization. Now, third one, it has to spend 1 lakh on refreshments served every month to its customers. So they have to treat the customers well. Okay, so for that, they will have to incur some expenditure towards providing some refreshment to the customers visiting them. Okay, so for that, there will be an expenditure of rupees 1 lakh. The last one, it sponsors a telephone program every week at a cost of rupees 20 lakhs per month. Yes, another major expenditure. The company will have to incur 20 lakhs rupees towards advertisement in TV or sponsorship, so that its brand value or the product is known in the market. Okay, you might have seen various companies giving this ads in the company. Why do they do that? Because they want to get more publicity for their products, and due to which they want to sell their products in huge quantity or huge volumes. Okay, so if you incur all these 4 expenditure, the company will be able to sell 100% of its products. Okay, now next, it can market 30% of its output at rupees 550 per unit without incurring any of the above expenses. Okay, so if you incur all these 4 expenditure, you can sell how much quantity? That is 100% of your capacity. 100% capacity will be 1 lakh units. On the other hand, if you are not spending all these expenditure or any of these expenditure, then you will be able to sell the goods, but you won't be able to sell 100%. Rather, you will be able to sell only how much? 30% of your output, and 30% of your output will come to only 30,000 units. Okay, so if you don't incur all these expenses, you can still sell 30,000 units. And at what rate you can sell it? 550 per unit. Why 550? If you see, if you are selling 100% of output, that is 1 lakh units, you can sell it only at 500 per unit. But if you are selling 30,000 units only, then you can sell at 550. See, it's a principle of the law of price and demand. When the demand increases, the price has to come down. Am I right? Because if you want to sell more, you will have to reduce the price. We have to price your goods lower so that more people will buy it. But if you want only less quantity to be sold, then you can charge higher price from your customers. Okay. Now, what is the requirement here? Prepare a cost sheet for the month showing total cost and profit. What is the profit percentage? Profit percentage is not given because the selling revenue as well as the cost is available. So profit you have to compute, and it has to be computed at both 30% and 100% capacity levels. Okay, so this is basically a simple question. There is nothing complicated. Yeah, we will see. Okay, so what is the first requirement? The first requirement is you have to prepare the cost sheet at two different capacity. What are the two different capacity? 30% and 100%. Okay, at 30%, what is your cost elements? At 100%, what is your cost elements? You prepare a cost sheet, and this cost sheet should give you cost of sales as well as the profit. Okay, and of course the sales revenue. Sales revenue you can easily compute it. Okay, so prepare statement of cost, which is the month. No, the which month they have not specified. So statement of cost for the month. Okay, so now capacity utilization at 30% and 100%. Now, number of units sold or that can be sold at 30%, it will be 30,000 units. At 100, it will be 1 lakh units. Okay, now cost statement you have to prepare. So that we will prepare in a tabular format. So the first column will be cost per unit. Then you will give total cost. Again here, cost per unit, total cost. Okay. Now, what should be your starting point? See, generally we start the cost sheet with the prime cost. Okay. But here, the segregation of prime cost is not available. The question itself starts with the works cost per unit. Okay. So your starting point should be works cost. Works cost. What is your cost per unit? Cost per unit against 30% capacity is 380. So it will be 380. And what will be your total cost? Total cost will be 380 into 30,000, right? So 380 into 30,000 will be 114 lakhs. Whereas the cost per unit at 100% capacity is 310. So total will be 310 lakhs. Okay. Now what do you have to do? This is only the works cost. Now with the works cost, you have to add other expense. Okay. Which are the other expense? You have the fixed administration expense, 1,50,000. It is 1,50,000, and 1,50,000 when you convert into per unit, here it will be 1,50,000 divided by 30,000. So it is 5 per unit. Here also the amount is 1,50,000 and 1,50,000 divided by 1 lakh will be 1.50. Okay. Now next, again, you have to take the next one, add fixed marketing expenditure. Fixed marketing expenditure, it amounts to 2,50,000. So 2,50,000 divided by 30,000 will be that is 8.33. And here also it is 2,50,000 divided by 1 lakh, that is 2.50. Now, next one, they say that there is variable distribution cost, that is 30 per unit. So add variable distribution cost. 30 into 30 per unit into 30,000 will be 9 lakh. And 30 into 1 lakh will be 30 lakhs. Okay. Now you have some special cost which will be incurred only if you want to sell 1 lakh units or if you want to operate at 100% capacity. So add special cost incurred for capacity equivalent to 100%. Which are those expenditure? You have to first consider you have gift items 30 per unit. Gift items, it will be 30 per unit, means that also will be 30 lakh. Then price to lucky draw. Okay, how much is the total price for lucky draw? They say that there is first prize will be 50. Plus what is second? 25. Third is 10,000. So 50,000 plus 25,000 plus 10,000 plus. Then they say that there is cancellation prices of 55,000 each for 3 persons. So it will be 3 into rupees 5,000. So that will be 50,000 plus 25,000. That will be 75,000 plus 10,000. That is 85,000 plus 15,000. That is 1 lakh. So here it will be 1 lakh, and 1 lakh divided by 1 lakh will be 1 rupee per unit. Okay. Now next is, there is one more, refreshment expense of rupees 1 lakh. Refreshment expenses, again, total is 1 lakh, per unit will be 1 rupee. The last one, the fourth cost is television program sponsored. Television sponsorship. What is the amount? The amount will be 20 lakhs. 20 lakhs divided by 1 lakh will be 20 rupee. So we have considered all the cost. Now what do you have to do? So it is basically all the overheads, right? all the administrative as well as selling and distribution overheads we have considered here. Okay, you know, works cost plus administration overhead plus selling and distribution overhead will give you the cost of sales. See here, you don't have any inventory, so you don't have to do any inventory adjustments. The assumption is that whatever you are producing, same thing you have sold, so there is no inventory levels. Okay, fine. So what you have to do is you can find out the cost of sales. We like 80 plus 5, that is 385 plus 8, 385 plus 8.33 plus 30, that is 423.33. Okay, so the total cost will be 114 lakhs plus 1,50,000 plus 2,50,000 plus 9 lakh, that is 127 lakhs. Per unit cost 310 plus 1.5 plus 2.5 plus 30 plus 30 plus 1 plus 20 plus 1, that is 396. And if you take the total cost 310 plus 1,50,000 plus 2,50,000 plus 30 lakh plus again 30 lakh plus 1 lakh plus 1 lakh plus 20, that is 396 lakhs. Okay, now what next? Once you get the cost of sales, then you have to add the profit, but profit you don't have here, so it should be taken as the balancing figure. But we have the sales revenue. What is the sales revenue when you are selling 30,000 units? It is 550. And here it is 500. 500 into 1 lakh will be 500 lakhs. 550 into 30,000. That is 165 lakhs. So 550 minus 423.33, that is 126.67. So 165 minus 127 will give you 38 lakhs. Then 500 minus 396 will give you 104, that is the profit per unit. Now total will be 104 lakhs. So what was the requirement? The requirement was to prepare a cost sheet showing total cost. It is there. So cost of sales or total cost. Next, profit. Profit is also shown. Okay, so that's all with this question. Again, a simple question, but then here the only difference is that you are not preparing one single cost sheet. You are preparing cost sheet for two different activity levels, that is 30,000 and 100,000, 100%. So with this, the entire questions in this chapter is over. Friends, this is basically a easy chapter. And let me tell you, you will get questions for your exams from this chapter. So with reasonable sort of preparation, whenever you get questions on from this particular chapter, it is going to be a cakewalk for you. You can score the entire marks if it is asked as a score sheet, because if you know the format and if you do the calculations correctly, then there is no way that you can lose marks in this particular questions. So a very good chapter for scoring. So please give that importance to this chapter while you prepare also. Please solve all these questions and do it repeatedly. Okay. So with this, let's wind up this particular chapter. And in the next session, we will be starting with the next chapter, that is chapter number 7. Okay. Thank you.